All right. Well, welcome traders to followmetrades.com, this special live trading room for the FOMC announcement on Wednesday, September 18th, 2019. Glad you could join me here. It should be interesting. And we got about 30 minutes until the Fed announces their decision. And then half hour after that, Jeremy Powell will have a press conference. And both those events should cause, probably a reaction in the market. It looks like folks are still getting logged in. Again, glad to have you here. For anybody who's new, hasn't been on a webinar with me here on using the Zoom platform, make sure you can locate the chat feature. There should be a control panel. Where it's at, what it looks like depends on the platform you're using to log in here. But try and find that chat, and just to test it out, go ahead and type in where you're calling in from, what city, what state, what country. It's always interesting to see. We typically get people from all over the world, and so take a moment there and type that in. And Drew's calling in from Redmond, Washington, just up the road. I'm here in Olympia, Washington, and for folks who don't know where that at, I'm just south of Seattle, about an hour south. Roger's calling in from Chandler, Arizona. Well, I've been to Chandler. I used to work for Intel, and they got a big site there, as I'm sure you know. And I've been to that site. Ken's calling in from Phoenix. Welcome, Ken. Glad to have you here. P.S. Santan Valley, Arizona. 3 in a row from Arizona. Guillermo's calling in from Austin, Texas. I used to go to Little Rock, or not Little Rock, Round Rock, to go visit Dell when I was working with Intel. Stephen, Little Rock, Arkansas. Well, welcome, Stephen. Glad to have you here as well. Let's give it a moment for more folks to log in. I had quite a few people register. I think people are pretty interested in what's going on with the Fed and interest rates and how the market's going to react. It's usually not boring. I'll go ahead and do a quick introduction while we're waiting here. And first, quick disclaimer. So we're going to be analyzing the markets. I may be looking for trades, and if I find a trade that meets my criteria, I'm going to go ahead and identify it. I'll probably take it. So, but I'm not giving financial advice. I share the trade setups I'm looking for. I share what I'm looking for, trades that I take, and then for my subscribers, I share how I manage those trades once I'm in them. But everything I presents for education, information purposes. Whether individuals participate in the trades that I like or not is strictly the decision of each individual. Only you know what's appropriate for you. So I'm not giving financial advice. I share what I'm doing, and it's for education, information purposes. Okay, if you don't know me, if this is your first time in one of my webinars, just hi, I'm Dean Jenkins. I'm the founder of followmetrades.com, and I am a technical trader. I've been trading for over 25 years. I started as a fundamental trader and got totally frustrated with that. What I came to realize was all that fundamental information is important, but what's important is how the market is responding to all known public information, and that ultimately is reflected on the charts. And I think we have at least for shorter term, swing type trading, which is what I do. I think we can better identify moves by doing technical analysis based on how the market is responding to the information and trying to look at the information and guess what people are going to do. I got interested in technical trading in about 2010, made a lot of mistakes, but in a couple years, finally settled on the system I'm using today, and I've been using that system now for over 7 years. And in 2015, I launched this service, followmetrades.com. And we run a stock picking service, a trading room, and offer some training and education courses. So that's just a quick intro to me. Here's what we're going to do in this trading room, this session, special session for the FOMC announcement. I'll show you the trade the news setup that I like. It's a short-term intraday, or short-term setup. It can stretch beyond intraday. But I'll show you what my setup is, and then we're going to watch the market reaction to the FOMC announcement. We're going to look for any setups, and if they present themselves, demonstrate the trade. I'll also discuss some trade setups on larger time frames. I'll share some trades that I like right now on individual stock charts, on daily charts, a little bit longer time frames. you should leave here with some actionable ideas. But again, I offer what I am doing. Whether you trade that or not is your decision. And I'll be happy to analyze any charts you're interested in using my techniques. And I believe my team member Eva is going to join us a little bit later in the session, and she's really good at analyzing charts, and she'll probably analyze some as well. And Guillermo says he wants to email me some photos from his vacation to Mount Rushmore and Devil's Tower. Yeah, send them. I've actually been out there. I've ridden my Harley out to Sturgis 5 times. And, we ride up to Rushmore. We've been out to Devil's Tower, out to the Badlands. It's a really nice country. It's really, really cool stuff to go see. All right. So let's do a quick poll. People are still logging in, and we got, some time here before the FOMC announcement kicks off. So what I'm going to do is do a quick poll. We want to see what you guys think about what the Fed's going to do and how the market's going to react. Hey, Nicholas. Nicholas is here. Well, we can get started now, Nicholas, now that you're here. Appreciate you being here. Everybody else. So it looks like we got a good number. We've got about 40 people logged in so far. I had well over 100 register, so people probably be trickling in. Let's go ahead and kick off a poll. I think we got enough people here to get a good sample. So let me start. And the first question I'm going to put up here as this poll is, what do you guys think? So there's a huge expectation right now. All the smart people, all the analysts and commentators think that the Fed is going to cut rates this time. But what do you think? Go ahead and vote. They're going to cut it by a quarter point, half point, no change. Anybody think they're going to increase it? Or you could say, I have no idea, which is a legitimate answer, right? So votes are coming in. And as soon as looks like people are done voting, then I'll go ahead and close the poll and I'll show the results. So go ahead and click. Looks like about half of you have voted so far. So if you haven't, go ahead and take a minute, click on a button there. Have some fun. And it looks like more people are still logging in. Welcome, glad you're here. And you can see on the screen, we got a poll going on that you can participate in. And the question is, what's the Fed gonna do with rates? And fun to see people's opinions, and we won't have to wait long, and then we're gonna know the answer to this. All right, looks like the responses are slowing down. So I'll go ahead and close the poll and show the results here. We got 57% of the people in the room voted. So here we go. You should be able to see that those results for the poll. So 54% of the respondents said that the Fed's going to cut rates by 0.25. One person thinks half. 8 people, 31%, say no change. And a couple folks say they have no idea. And again, that's a legitimate answer. I'm looking at what's going on in the S&P 500 futures right now. So I got the S&P 500 on a 10-minute chart here, and you can see it's down about 10 points, 0.35%. It is finding a little bit of support and hitting back up right now, at least in the latest candle. But there's some other stuff going on, of course, than the Fed rate cut. There's this story that has kind of gained some momentum. Oops, I'm not sharing my chart. Let me get that right. All right, let me go back here and share my screen. There we go. All right, so I was showing this S&P 500 10-minute chart here, and you can see down 10 points today, 0.34%. The Dow is off 74 points. So there's some other stuff going on that is affecting the markets in addition to the upcoming Fed announcement. Of course, there was the oil shock over the weekend, the attacks on Saudi Arabia. Looks like it's pulling back from those highs over the last couple of days. And then this story that continues to pick up momentum, and it was kind of a big deal for that a small number of folks knew about, but this Here's the article. It says a crack just emerged in the financial market. The New York Fed had to bail it, had to jump in quickly to get control over the overnight lending rate. It had spiked to 10% yesterday, and they had to jump in with 53 billion of liquidity to try and get that stopped. The overnight rate had jumped to 10% at one point, which is, crazy. And the last time the Fed had to jump in and do that was back, the subprime crisis back in 2007. So that's a little worrisome. So that's got people a little bit on edge, right? And of course, the Saudi Arabia attacks have people on edge, and it looks like most folks believe Iran was behind that, and that just dials up global tension, right? The market doesn't like uncertainty, so we got that going on. Let's kick off our next question. So we said first, what's the Fed going to do? And over half people said quarter point cut. So here's the second question. How's the market going to react to whatever you think the Fed's going to do? Is the market going to go up? Is it going to go down? Or is it pretty much going to go sideways? Or I have no idea. And Guillermo says the market, big move up if the Fed cuts a quarter point. Well, that's certainly the expected thing, is that the Fed's going to, it was almost 100%, 98% confidence late last week. Earlier this week, there's been, some conflicting economic indicators. China's slowing down, but like today we just had the construction spending, new house starts, permits, and it was unexpectedly high. So there's, some strength in the American economy. Maybe it doesn't need stimulus. A lot of cases to make it either way. So looks like almost half the people who are here have voted. And if you just logged in, glad to have you here. Welcome. We're just having some fun, doing some polls here and keeping an eye on the market while we're waiting for the Fed announcement, which will be coming at 2 o'clock Eastern, 11 o'clock Pacific time, which is where I am at. I'm on the West Coast, Washington State. All right. If you're going to vote, go ahead and get it in. Looks like they're slowing down. We've had just over half the people in the room log in with their opinion here about what the market's going to do. Pretty mixed result on this one. I'll give it 60 seconds more, and then we will shut that down, and I'll show you the results. And if you are just logging in, make sure you can locate that chat box in the Zoom webinar platform. Go ahead and type in where you're calling from, city, state, country. It's always fun. Just make sure you can use that feature, and you can also talk to the other traders who are in the room. You can probably see some of their comments in the chat box there. There is a button for raising your hand. You can press it if you want. When someone presses that button and it says their hands up, I never know what to do. It's like, well, if you got a question, type it in the box and I'll deal with it. Patrick's calling in from Belgium. Hey, glad to have you here, Patrick. And you get the distance award. Oh, Kenneth maybe just beat you with Nairobi, Kenya. Well, hey, Kenneth. Would you believe I've been to Kenya? I was in the Navy. We made a port stop there. That was pretty cool. Nicholas calling in from LA. Brian says high five. Chu is calling in from Philly. Sorry about the Eagles, man. That was no good Sunday night. I was rooting for him. Julio Jones, man, unstoppable. Brian, LA. Glad to have you here, man. Okay, looks like the polling, people responding it slowed down. Over half, 60% have voted. So I'm going to close the poll and I'm going to show the results here. All right, so the question was, how's the market going to react to whatever it is the Fed does? And we got 34% of the people saying it's going to go up, 28% say it's going to go down, and 28% go sideways pretty much. So that's almost evenly distributed. And then we got a couple folks saying, I had no idea. That's okay, Because ultimately we're going to trade based on what it does do, not what we think it's going to do. At least that's my approach. And I'm going to try your name here. I'm probably going to mess it up, but I'll try. Soma Sundaram is calling in from India. Glad to have you here. All right, well, thanks for participating in the poll. So, you know, the results were over half people thought we're going to get a 1/4 point rate cut, and then we got a pretty even distribution about what's going to happen in the market. People are kind of uncertain. Let's go ahead and take a look. And Virginia says it'll be a head fake if it goes up initially. You know, I think I'm with you on that, Virginia. And you know, I'm not a perma bear, but if we look at the S&P 500 chart, daily chart, right? You know, first of all, if we look at it on a, let's look on a monthly time frame, right? 10 years, 10 years, an incredible bull market run, right? From sub 800 to up over 3,000. That's an impressive move. At some point, these things correct, right? Historically, there'll be a cyclical, healthy, normal correction in this thing. So we got to keep that in the back of our mind. And then you can see on a daily chart, here's the all-time high, 3027.98. We went up and approached that last week and got a pretty good reversal off of it. We're pulling back right now. So at least getting down to this prior low, I think there's a decent chance. It's kind of a reversion back to the 200. It came, this thick line's the 200-day moving average. We came back to it in the summer a couple times, right? So a bit of a reversion to the mean, even if it's going to continue on to new highs. And maybe at some point, someday, we're going to see a larger correction begin. So I'm tilted somewhat toward the downside, but I just think this is getting pretty mature, and there's quite a number of factors that people are starting to worry about: recession and slow growth and stuff like that. And Nicholas says, don't think we'll get the normal juice we would in a rate cut, given all the uncertainty. Yeah, you may be right. Am I sharing my screen? Gosh. When I do the polls, it throws me off. So here's the S&P 500. If you, on the daily chart, you can see reversed off the all-time high, 200-day moving average. We hit it here. We came close to here. So, you know, just a reversion to the mean would take us, you know, down, you know, a couple hundred points on the S&P, which would be probably a couple thousand points on the Dow. And I was showing this on a monthly chart. And you can see here, monthly chart, you know, 10 years, rocket ship. It's been an impressive bull market that, you know, will correct at some point if history is any indicator. Guillermo asked, what do I think will happen to the USO ETF? Well, I think it will follow the crude oil futures pretty closely. That's how it's designed to do, at least proportionately. Get back to daily. You know, so when I want to know what's going to happen with oil, I typically come look at the futures chart first. Right, and you can see, you know, we're in, you know, in terms of Elliott wave, we're in a down sequence, right? Big impulsive move down. There's a correction working its way down. Had this big shock here, but it's still within a correction zone to that prior high. So oil's a little bit bearish right now, but a little volatile to trade. And you know, kind of memorize this pattern, and we'll bring up USO, and you'll see it will look proportionately identical, and that's what it's designed to be. Is to track the price of oil. So I'm overall a little bit bearish. I would not be trying to get long on oil personally. Okay, we got about 10 minutes. Let me talk about my trade setup. So here, when there's a big news event, you know, this is typically known news, and it can happen even when there's a surprise news, a shock, right? But typically when there's new information that enters the market, and if you're just joining, you know, my approach to trading, I used to be fundamental trader. I switched to technical quite a while ago. And the reason is I believe all known public information is you know, it's public, everybody knows it. And the market participants are reacting to that. They're expressing their opinion about what all that information means, and you can see it on a chart. And when new information comes in, their opinion changes, and it can change dramatically. So when there's an initial move after a news event, right, a short-term move, what I don't try to catch that, right, because you have no idea when it's going to end, where it's going to find support. But what if there's going to be some follow through to it? What we can see happen is a retracement, right, a big move in one direction, and then a momentary short-term retracement into a Fibonacci zone, 38.2 to 61.8. So I watch for big move and then a retracement, and then I look for evidence of the that original trend to get some follow through with a lower high, new low. And so this is where I would be trying to time an entry, and you can see, you know, there's some pretty good follow through. So that's the setup I'm looking for in a short-term move. So this is a bearish move on the S&P 500. Here's a long setup, you know, kind of goes the same way. There's the initial move. There's our correction right into a Fibonacci retracement zone. And then some follow through after this, a high, higher low, new high, and, you know, good trade opportunity. This is just much higher probability than trying to jump in here, because typically after a impulsive news-related move, there's going to be some kind of retracement. Now, once in a while, it'll just continue on up, and I miss the entry, and that's okay. I'd rather, you know, have a trade setup that I know that has high probability, rather than just, you know, kind of blindly jumping into a, you know, a move that's just running away. All right, so that's the setup. It's pretty simple. And what we're going to do is watch when the FOMC announcement comes out and see if, typically, you know, oil isn't that much affected. Oil's had its own shocks and moves. But, you know, I'll be watching gold, and I'll be watching the S&P 500 and the other indexes. But the S&P is, you know, it's broader. It's 500 companies, and it's unweighted. So I think it's a better representation of the overall market than, say, the Dow. So I got my futures chart here. We'll be watching the S&P 500 on a 10-minute chart. I think I'm going to switch that for this. I'm going to switch to 5 minutes, since it's going to be a little bit shorter time frame reaction. So we'll switch that. And then gold. We're going to be watching gold futures as well. Let me switch that to 5 minutes. So these are 5-minute charts. And this lower one here is range charts, very high resolution, very small interval. And it's not based on time, it's based on movement. So the gold is 8 ticks, takes 8 ticks of price movement to create a price bar. And the S&P 500, 5 ticks is a pretty good setting for that. So like I said, we had most of the morning session, the session today, we've had a move down in the S&P 500. It's finding a little support, it's heading up. So things could change in about 6 minutes when the announcement comes out. Now I'm going to be watching the chart. So I'm going to count on you guys. Once the announcement is dropped, if somebody would go copy it and paste it into the chat thing here, it would be great to see it. If you, a good news source, if you don't have one, is this forexfactory.com, and they got a news tab. It's free. And they definitely usually are pretty quick to report any major, you know, broad market. You know, this is focused on Forex trading, but things like the Fed rate announcement and, you know, global economics, right? They're tracking that and a pretty good job of reporting it pretty quick. There's other sources as well. All right. We got about 5 minutes before the announcement. Any questions anybody has, or any comments while we're waiting? Otherwise, we'll just hang out here. Mike says in these situations, he tracks potential tickers in the hours prior to the announcement and consider small strangles to capture the initial shock. You know, I like strangles. I like straddles for, you know, kind of shock events. I think those work pretty well. And if anyone doesn't know, it's an option strategy. I always get the two terms, they're very similar strategies. Let me bring up my option deal. If let me make sure I'm right before I make a statement. They're basically taking a position. You go, I don't know the direction. I'm expecting a big move, and I want to profit from the big move regardless of which way it goes. And so, yeah, straddle is where you take two contracts at the same strike price. You buy one call, you buy one put, or whatever, equal numbers. So you're straddling a given strike price at the money typically, and you're just waiting for a big move. One side's going to lose and one side's going to win bigger. Strangle is where you go on either side of it rather than going at the same strike price. You might go, in the money on both sides, or if your strategies go out of the money, but you're not at the same strike price, but they're generally pretty close. So you're buying a call, you're buying a put on either side. You expect one side to lose, but you expect the other side to win much bigger to cover that loss and net you some profit. And it's a pretty cool strategy. You just have to have a big move. If you get a wimpy move, then you're going to lose money on the strategy. But you can control that. You can control the loss through how much you spend on those contracts. So as long as you're following some money management, risk management guidelines, it works out fine. After the announcement and after we see if there's a trade setup, I am going to review some of the current trades that I like. I've got quite a watch list here on my notepad that I'm tracking for some potential trades that I'm going to take myself and that I'm going to publish to the subscribers of my stock alert service. And Nick says straddles can be very expensive. Yeah, it depends. Expensive is relative, right? He likes strangles at about 30 deltas. Yeah, everybody's got their own kind of twist on the strategy, but I think the overall strategy is good. What you want to be able to do is model it and understand what kind of move it's going to take to generate a profit, right? And then have a reasonable, good reason to believe you're going to get that kind of move. Okay, we got 2 minutes until the thing. We have any volunteers? This is where you can press the raise your hand button. Any volunteers to paste the announcement as soon as it comes out? Because I'm going to be watching the chart. Make sure if you're gonna copy and paste that announcement, change that address bar in the chat box to all panelists and attendees so everybody can see it. Because if you leave it at panelists, only I'll see it. Chew, says Navy, never again volunteer yourself. That was a very famous saying. I was in the Navy. I did 6 years on active duty. And yeah, we repeated that phrase, that acronym quite frequently. But it was a good experience overall. And we had somebody calling in from Kenya. I got to pull into Mombasa, Kenya. It was a great experience. Okay, here we go on the announcement. And it's kind of fun to watch. Pretty much the instant it hits, boom, there'll be a reaction. You can see gold is dropping pretty dramatically. And the S&P. We had a bigger reaction in gold than we did the S&P. Quarter point and hold, Patrick says, is the so that's what everybody expected. That was the expected move. Now the S&P's heading up. Nicholas said, is that the head fake in the S&P? You know, that initial little wick there, I think, was people just trying to guess what was going to happen and then liquidating positions or whatever. It's pretty volatile, actually. The S&P really can't find a direction just yet. People are trying to digest it. And Mark says the press conference will be the key. They definitely, everybody will be watching the body language at the press conference and reading tea leaves and stuff. I'm going to dial this down to a 2-minute. So I think we can call this an impulsive move down at this point on this 2-minute chart. So let's wait and see if it finds a bottom and starts correcting, and if we get this trade setup that I talked about. Virginia says still need to hear from Powell. Could create different results. It could. And that press conference is, 28 minutes away. It will take a while. And by the way, if I'm going to take a trade, I don't trade futures right now. I like, because I think holding futures overnight is kind of a bad idea. You got to have a, 7-figure account to do that. So I like trading the SPY for the S&P 500 and trading options on it. So if we see a trade set up, I'll switch over to the SPY here and I'll show you what trade I like and what contract I would use. We've got to let this set up a little bit more though. And Yankee's opinion is better to do a debit spread or diagonal. Yeah, I mean, everybody's got their strategy and their opinion. I don't care for spreads or diagonals personally. I like long option positions. I like the black and white, never can be violated, well-defined risk that I can control and stay in control of with a long option position. But I'm glad there's sellers out there. I also don't like the reward to risk profile of spreads. You can make a fixed amount, you can lose a much larger amount. That math doesn't work for me. That's my opinion. Everybody's got their own. Really having a hard time picking a direction here, isn't it? So I showed you my setup and I said, if we had this impulsive move and a retracement into a Fibonacci zone and then evidence it was going to head the other way, that would be a setup. If it goes above this 76.4 line, that retracement's too high and is invalidated. So it's a little sketchy right now. But you can view that as an impulsive move on its own and then be looking for a long trade if it does go above this line here. See what gold's doing. Gold's a little more stable here. Gold's got this impulsive move. It's got a retracement into here. So this could present an opportunity. A short on gold, surprisingly. Typically, over the long term, gold and the indexes move inverse for the most part. They have an inverse correlation, but in the short term, it's not always true. Frank says, got here late, what did the Fed do? Quarter point and hold. Quarter point cut and hold is the current deal there. And so we're waiting the news conference where they expand on that. Will be in about 23 minutes. Yeah, so the S&P just went above that 76.4 Fibonacci line. So it invalidates this as a retracement, and this becomes the new impulsive move. So we'll watch that. Mike says the market's amazing. In the last 3 minutes, billions of dollars have gone from one side of the ledger to the other. It is. It's the most competitive endeavor on earth. I keep telling my my son, who's 21, he used to play video games a lot. Not so much anymore, but I used to tell him this is the best video game on the planet right here. Hey, Eva's here.
Hi, Dean. Hi, everyone.
I mentioned earlier to the folks in the room that Eva might join. Eva's a member of the team here at Follow Me Trade. She's a really, really good chart analyst and trader. And so in our trading rooms in the morning, she typically takes requests, any stocks that people are interested in. And then she's been through, she's been working with me for a number of years now and been through all my training, and she can analyze charts. We pretty much come up with just about the same conclusion on every chart we look at.
Yep, we're pretty consistent.
Yeah. And she even runs the trading room when I'm off on vacation once in a while. So, well, the S&P is just gyrating, just swinging. There's not really a pattern. So we may have to wait for Mr. Powell's comments to see if we can establish a direction in a trade there. So this will be a good time. If you have any stock symbols that you'd like analyzed, Eva can take the screen here, and using the method that I've established here at Follow Me Trade, she can offer some analysis and opinion on trade ideas.
So while I was in the car, I was listening to the released comments, And I think what everyone's upset about is it said there will be no more rate cuts this year, next year, and the next, in 2021, there will be a rate increase.
Wow. So that was not, they wanted to hear a roadmap of cuts.
Yes. But then again, the commentators said there were supposed to be, I think, 4 rate increases the last election year, and there were 0. So, don't read too much into comments like that, they were basically saying.
Right. And that's, based on what they know now, which can change in a flash, right?
Yes. So do you want me to take the screen and look at, we've got a few requests here.
I mean, Saudi Arabia could declare war on Iran, right? And that's going to change everything.
Oh, yeah. They also said with our interest rates being high, it'll continue to cause foreign investors to invest in the US, and it'll cause that yield curve inversion again. Just because they're running for higher rates.
So you got a stack here of symbol
Yes.
people. So go ahead and take it away and have a look.
Okay.
And just a reminder, because we got new folks and guests here, just a reminder that we're going to offer our opinion on these trades, and I'll share a few that I really like. We're not giving financial advice. We're sharing what we like. Whether anybody acts on this information, you gotta be responsible for your own money, your own trade. So we offer this for education information. We're not giving financial advice. Each person's got to make their own decision.
So I'm going to squish this up to see, well, went all the way down and all the way back up. So trying to get a wave count here.
And James says, have you ever heard of the Fed say we'll ignore data going forward? No, it's always, here's my favorite quote about an economist. So Harry Truman, right? Because most economists are loath to take a firm position, right? And they'd say so Truman would ask his economic advisors, what do you think? And they go, well, on this hand, could do this, and on the other hand, it could do that. And Truman, who had great sound bites, said, you know what I really needed is a one-handed economist.
Took me a second, but I got it. Okay, so the first request is EWZ. So this completed a 5-way count. This was the impulsive move up, retraced nicely right into the retracement zone, then went up in a wave 5, hit the target. So after a 5-way completion, there's an ABC complex correction. So it looks like we've got A, B up, possibly could have C down. It isn't there yet. We've got this consolidating area, finding support on the 200. But if it did set up, you could have a target to this prior low, and it could possibly go to this low. But conservatively, you would want to start with this one. But currently, there isn't a setup long or short. WAB. So impulsive move down, retraced, had a possible, because we did go up 1 down, this could be a shallow wave 5 retracement, or we could still be in wave 5. So this is a low, lower high, and it could turn to head back down towards the target here. But if it is a shallow, then this is A, B, C, or A, B, C. The complex correction's harder. You kind of have to wait for the new trend to develop. CNC. Impulsive move up. Retracement right into the target. It's finding a great deal of support right at this level. So the next move would be to the target up here. But you're not at all, you still have a red L, You have low, lower high, lower low. So no setup, but the next probable move is to the upside. AMD. Impulsive move, pull back, and heading towards, oh, it got very close to the target. It's channeling now. So this could have been its high. It found support. It's finding support here, but it's found resistance about the same level as the previous high. So currently channeling, no setup there. J&J. So this one is very, just really, it's channeled, from roughly, move that one. It's channeled between these 2 points for quite a while. I mean, this is back in early 18, down, up, down, up. So it could hit this target again down here. But you can't really do a wave count when it's channeling like this because every move is a complete retracement. So, yeah, chance that it could go a third time down here, but there's no guarantees, well, for anything, but the probability isn't there to say it would get there or not. TPH. So our impulsive move is to the downside. So impulsive move down, really nice retracement. Started down, but this is a continuation of the retracement. And the next probable move would be down with a target. So there is a slim chance, since this is where this could have been a shallow retracement. So this could be our ABC going on here. But again, it's not conclusive. Is this just continuation of 4 and it'll head down and go into the target zone? Or was it shallow and we're looking at an ABC, looking at a new trend setting up? Not clear on TPH, Mark. Adobe. Nice impulsive move up, retraced, went, here was the target, but we did get a shallow 5. It went beyond this line. So we are in the ABC complex correction. It's finding support here on the 200. Owl's still red. So it could still be heading down. But you've got areas of support here and then again here. ABCs are very hard to trade because you don't really have, when you're in the wave counts, we can put in projections, but you can't in that ABC move. NVIDIA. Three, four, there, it gapped down here. And gaps are something we need to watch because often, as you'll see here, it filled the gap, got near the top of the gap and reverse. So until it completely fills the gap and goes beyond, would not want to get into this trade. But if it does, it's got a really nice target up to the previous high. So if it can get through that 193.50 area and show that it's moving beyond there, it would be a very nice trade setup. And it is. We've got a high, higher low, higher high. So everything's there to set up properly. We just need to get through that gap. And it's getting close. MU. Excuse me, I had to mute. I sneezed. So 3, 4. It started 5. High, higher, low, higher, high, higher, low, higher, high. I mean, except for this consolidation, we want to see it break out of this. It's setting up nicely. Got a green owl. So the only thing keeping this from being a good trade right now is this area of consolidation. Want to break above that by, yeah, break out about there. Have a nice target up there. Let's see. That's everything. Anything you wanted to look at, Dean?
I'm gonna take the screen back and show something here. So the S&P 500 has pulled back. You know, the futures here have pulled back pretty good. They're continuing down with a nice low, lower high. Now things could change. You know, I think we'll wait on a trade until the press conference and give that a moment or two. But we're watching this for a potential short, and I'm looking at the the SPY. So this is the SP 500 ETF, SPY. I'm looking at it on a 30-minute chart, and you can see, you know, from into August up through now, we had this run up to where, you know, on the S&P 500, we approached the all-time high, failed there. And we got pretty good evidence now over the last day or two of a trend change, right? Lower low, lower high. Now we got a new lower low. We're breaking through critical support areas here on the 30-minute chart, the 200 period moving average, the Ichimoku cloud. We got negative momentum. So when we combine this with the shorter term, it looks like the short term, you know, in the futures, if this continues, is confirming a setup on a longer term chart. So I'm actually liking a short if things continue down at the press conference. And what I would do, I'd put my stop right here. So this is the, you know, if it goes above that, then this whole thesis is invalidated. We'll just close the trade. Right, so my stop's going to be here. You know, if we take an entry at this current price, which may change by the time we take it, but right now, this is about where we'd be taking our entry short. And then we got a target. So it looks like this thing's going to retrace into this Fibonacci retracement zone. There's really no major support levels. These are just, you know, part of that uptrend. So this could be a legitimate target. Short term, 30-minute chart, right? So that would play out over a handful of days. But I want to, you know, be ready if it kept going too. So that's kind of what the setup looks like. And if you're new, you know, I look at the ratio, the difference between our entry and our stop versus the entry and the target. This has to be bigger for me. In this case, you know, it's 3-to-1 or something, pretty good. And then to trade the SPY, you know, my choice would be to do that with an option contract. And I pulled up the option chain here. And so, you know, it's a shorter term trade, but I want to have time if it really turns into a bigger trend. So I'm going to trade the November contract, 58 days left. I really want to be out of it, right, before we get into the last 30 days. So that gives me a couple weeks. And then my approach is to go in the money. I'm going to go long a put. You know, we talked earlier, some folks talked about spreads and diagonals and stuff. For a high probability directional move, you know, the math suggests that the lowest risk, highest profit potential trade is simply to go long on a put for a down move. You know, again, this is what I do. Each person makes their own decision. I'm not giving financial advice. I'm not trying to talk you into or out of anything. But my approach to trading this would be to go a couple strikes in the money here. I want to get as much delta as I can for as little money. So I think I like this 302. It's got a delta 56. It's a couple strikes in the money, reasonable price, you know, 837 bucks per. So that's your risk, right? The most you're going to lose is that 837. And by the way, if we go hit that stop, we're not going to lose 800 bucks, right? We're going to lose 200-300 bucks probably. So that, and if we're right, you know, I think it'll double in price. So that's a good reward to risk profile for me. So let's give the press conference a little time. It's going to start in 5 minutes. You know, we'll actually see the response here on the chart. And if if we continue down and if we break through this low with some momentum, I'm going to fire off that SPY short. So we'll be watching it. So while we're waiting, if you got any other questions or symbols you'd like Eva to analyze, we can switch back to that for a few minutes. Oh, Guillermo had one for you, Eva, PIR.
Yes, I see it. Let me grab back the screen.
And you can share a few of your own ideas you got from your own scanning.
Okay.
Because you've always got a handful you're watching, right?
Exactly. So Pier 1, it is coming off a bottom. Let's expand this out a little bit.
It used to be such a cool store. Can you remember the last time you went to a Pier 1 store?
No, I know where there is one, so at least that I know where to find one. I just have no reason to go in. Maybe I have enough knickknacks in my house. I'm trying to purge of knickknacks. So 2 minor pyramids, a major pyramid's about to be formed. Since we'd want to at least get this pyramid confirmed. Everything looks good as far as the L and the PTF. Often though, the 200 becomes a resistance area. Now it's made some attempts to go towards it, but it hasn't gotten through. So I think if it actually ended up breaking through, it broke through once back October 17. So it's been a long time since it was above that. So let's see it break through. Minimum confirm the pyramid. Better to break through the 200. And then there might be a nice setup there. So American Airlines. Oh. Mike's closest Pier 1's in China. That wouldn't be very close.
Yeah, if you fly to China, there's better places to shop than Pier 1, huh?
So this was set up a while ago, and well, so I have a question for you, Dean. For the American Airlines, would this still be valid? And this could have been a shallow 4, since there's 3 pyramids, and this is 5, or is this whole thing 3?
Well, that was very shallow. Very shallow. Yeah, you could interpret it that way, that it had wave 4 and now it's in 5. That's probably the well, I'm going to take that back. You look at those other moves during wave 3, they were kind of the same.
Right.
So it's not really different. So I would say we're still in 3.
Okay. I know. It was one of those, it's like, it could go either way. It was the fact that it had 3 pyramids. I thought, well, maybe. Oh.
And it's been very volatile, with the oil spike, the airlines got rattled. Airline stocks all have been volatile the last couple of days.
So it was heading up nicely, and it's pulled back. Found support at the bottom of the cloud. Next probable move is up and to this retracement zone here. If it's going to be a shallow one, it could go to the 200. But really need to get up above, get a higher high. I mean, this wouldn't be so bad with this gap down to have, then that could be a low and then a higher high. And then it could be a great trade setup if the risk to reward is there. Dean, do you want to explain the pyramids?
Yeah, the pyramids, Alex, and thanks for asking, because there's probably other guests here who don't know what they are. So you can see on Eva's screen, we got some red pyramids pointing down, some green pyramids pointing up. Those are pyramid trading points. They're from, they're an indicator, some software from traderscoach.com, a vendor that I have a great relationship with, work closely with. And, price moves in an uptrend in higher highs, higher lows, higher highs, higher lows. And those pyramids point out important higher high, higher low, new high sequences that meet the criteria for ratio of the up leg to the down leg. And the red pyramids, they indicate a downtrend, because a downtrend is lower lows, lower highs, lower lows. So when you see these pyramids, it's confirming, at least short term, a trend. and it gives you a point to enter at the pointy end of that thing, and a place to put your stop at the base of the. So that's the pyramids explained.
I was just curious. Sometimes we look at this, the spin viz. Earlier in the day when we looked, this ad, it was interesting. There was nothing bright green. There still isn't, but a few bright reds have popped up where there weren't before. So,
Mike in says AAL has a seasonality, about a 15% move based on in the next 8 weeks based on past data. Interesting you mentioned that. I'm about to introduce a new service and a guy that'll be working with me. We're working out the details, but he's done extensive research, got his doctorate in finance, and he's done exhaustive research on seasonality, and combining it with technical analysis uncovers some great trading opportunities. So I think we got the press conference is underway. Mr. Powell's at the mic. Let me take the screen here.
okay. And
here's the futures. You can see we've got kind of a support level established here. I've drawn a line. So if we get I'm on a 1 minute S&P 500 E-mini futures contract chart. If we get a good solid breakdown through that, I'm going to be taking that short trade that I talked about. So, yeah, mark an ABC correction. So, Elliott wave moves in, typically in impulsive and corrective waves. And then, I'll draw it on my canvas here. Well, we got a minute. We're kind of watching this chart. Get out my trusty pen. Oops, that's an ugly color. The Elliott wave, simple version, it has a wave 1, 2, 3 is the big one, 4 is a correction, 5 is a continuation. That's what 5-wave, very simple version of Elliott wave looks like. After this, you typically get an A, B, C kind of thing in the opposite direction. That's what we're talking about. That's really hard to trade. So we try to trade, this, sometimes this if there's enough profit, and this is the most probable because we got this whole pattern before. So we like trading wave 5 or 3 if we can catch it early. So that's a quick discussion there on the ABC. And again, that's a very simple approach to Elliott wave, not all these macro, micro, 144 permutations of all this stuff. It's just looking for impulsive moves, corrections, and then a continuation. And you are very welcome. Well, the S&P is just kind of consolidating here, isn't it?
Yes, it is.
Sometimes I got a trade teed up that I'd like to take, but I think it's important to wait for confirmation. Make sure it's not going to get support and bounce off this thing, go the wrong way. I'll be patient. Guillermo wants to look at go-go. I'll do that while we're waiting. Yeah, I figured that was a stock you were telling me about, not a encouragement to take the trade. So go-go, nice breakout. We would have liked to catch it here, and you can see when Eva was talking about some of the other ones, when it the pretty clear trend change when we saw it break through the 50, break through the 200, we saw the Ichimoku cloud shift colors. So an entry somewhere in here would have made sense. We would have had a stop down here, and we would have put an intermediate target at this high, and then a next target here. That's kind of late. We've kind of missed it. And after a linear move, even if it's going to ultimately go to more highs, it's going to pull back. It's rare to see a stock just go in a straight line. You get pullback. So enter now, you got a risk of a pullback. So I would wait. If it pulls back and you get a good entry and it reverses and you got a good target to here and a good reward to risk, maybe you got something going. But that was a great break, but the trade was back here, my opinion. Here's the S&P. So actually nice the way it found this support, because the stronger that support is, if it ultimately breaks it, that's a really, really good sign. So we would love to see that, something like this, You know, actually here we got this low, lower high, low. If we get some kind of lower high and then smash through, this would be a nice confirmation to go take a short on the S&P. If it doesn't, it doesn't. Can't make the market do what we wanted it to do. I can draw all the lines I want, but still stuck in reality.
It looked like it wanted to test it to go through, but
So we're 6 minutes into the press conference. Anything anything in the feeds from Mr. Powell?
let's see.
Has the president tweeted his disapproval of the one rate cut yet?
Oh, I would think so. With some choice words. So not sure. I mean, is the market not going to want to hear the rates are cut because slowing exports and low inflation?
I think the disappointment was that that's it.
Yeah, no future. And there was a lot of, along the plot points, I guess they call it, there was not a lot of approval.
The infamous dot plot.
The dot plot. I think they were expecting more people to be on board.
Oh, there it is.
No bad words. I mean, yes, bad, but I thought maybe there might be some other choice words. Well, the market is down 185, and before that, it was not down that much.
Yeah, the Dow.
Yeah, it's really not happy.
Yeah, actually, yeah, 188 right now, 189. So, but we know. Oh, Guillermo, look at that. He said, thank you. Love you. He must have been talking to you, Eva.
Oh,
Thanks, Guillermo. We love you too.
he always has a lot of good stocks to look at.
And a positive guy.
Mm-hmm. Well, it certainly does not want to go through the line you drew.
Oh, wait.
Oh,
What?
right when I said it, it's heading. Oh,
What is this?
I know. It's like red, green, red, green. Make up your mind. Red and going. There you go.
Oh, is that prior win?
It's a very shy. Now it popped up. A very shy candle.
And you know, the more it hovers there, the more important it is when it breaks, if it breaks.
Let's see, item. Let's see, breaking news. Stocks at session lows. That's the breaking news. Oh, we're down over 200 now.
Yeah, David, I'm just looking at you know, we had a low, we had a lower high, we pulled back to here, and so we've come and hit this. It's formed up as a real temporary, or, you know, for the moment, support level. So what we want to see is a continuation, low, lower high, low, lower high, new lows. We want to break through it, because right now the market can't decide, and so this is forming up as what we call a support level. And then if price goes through it, that has meaning. It means the sentiment just shifted. You're welcome. Yeah, I think I agree with you, Nicholas. Jeremy Powell kind of reminds me of the poor little league coach who just keeps trying to do the best job despite some parent is screaming at him. You spent hours at the little league and baseball team sidelines, Eva, right?
Oh,
Hours.
yes.
You've probably seen that parent, huh?
Oh, yes. The ugly parent. The one whose child's humiliated.
You see, we just got this potential bullish pyramid. So if this gets confirmed, we're going to probably shut things down. It would be take longer. You know, we'd have to sit through. This short setup could still happen, but if this gets confirmed, it means we're probably in for a bigger retracement up for the time being. I don't know if we want to sit here for another hour.
Will China devalue again? That is a question no one knows. Now I'm sitting on the sidelines of the ugly soccer parents.
Are they better behaved than the baseball parents?
Sometimes, sometimes not. It all depends on the situation.
Mark, CRM is still potentially in play. We got to get it to break out. You see, we got these opposing pyramids. It's a real tight consolidation area. So if it breaks out of that, confirms the down one, wipes out the up one, we might be looking at a good short there on CRM. So we'll give it a few more minutes here, and if it doesn't break, we'll go ahead and wrap things up. And before we wrap up, I'll give you, you know, the what to watch for and the parameters.
So I think this is what the market's liking. He's saying, because the market is coming back a little bit, this is a time of difficult judgments, the trade issues making things a little more difficult. They took this step to keep the U.S. economy strong. So those comments might counter that. No more rate cuts for a long time.
Okay, Mark's asking about CMG, Chipotle. What you should do is put a GPS tracker on Eva's car, because she takes carloads of kids there all the time.
Yes.
So this is a beautiful trend. Obviously, it's been going up for a long time. You can see it's losing momentum. So, you know, phenomenal. If you know those who are in it, I would stay in, have a stop here, but I would not try to join this trend. For me, it's too mature. It's too late to try and jump into a trend that's been going on for this long. I'm a swing trader, and this thing could swing the other way, and it could be over, but we just don't know. There's no way to establish a target with a long trend like this. And like I've reviewed with the other trade setups that I do like, I got to have a good reward to risk probably, reasons for the targets and all that for it to make sense. So great trend, good company, just a little late for me to try and jump into that.
But if it has a pullback,
It could be a short.
yes. Or even if it pulls back and you miss that, then you can set it up for a target on the long side.
Only the real traders think this is better than any suspense movie, right?
Will the pyramid be confirmed? And for those who want it to be short, that could be a very horror movie if the pyramid's confirmed. This is a time of difficult judgment. That is the constant headline I'm reading.
So our pyramid just vanished. Let's see if we get a bar close. Wicking down through there a tick or two. That may not be the kind of momentum I was looking for.
No, it looks, well.
Let's get back to this SPY. Remember, my analysis is taking place on a 30-minute chart on the SPY. That's where my trade's going to be if I do it. We're going to drag our entry down to current price. Reward to risk still looks good if we do it. Okay, there we are. That's good enough for me. That was a good solid break. So I'm going to pull the trigger on this. So this is my trade, and it's short on the SPY on a 30-minute chart, and my target is 292.90. My current stop is going to be at 301, and I like I still like this contract, the 302. So this is the November monthly. So the November 15th, 302 strike put is the contract I like on that. I'm going to go ahead and...
what was it, 305 you said?
302.
302, okay.
I'm going to go ahead and buy myself 3 of them dudes. And 866. I'm going to try and have a bid-ask spread going on there.
Order filled.
So I got them at 870. So that is a live order for me. And this S&P futures.
Oh, I beat you, 863.
Look at you. We did get a really nice break. And even where we're getting this pull up right now, it's a series of lower lows, lower highs, lower lows, lower highs. So of course it's going to pull up, but we think the overall trend is going to continue down. I'm on a 30-minute chart because I think this trade has some legs. It could go on for a handful of days. And that's why I'm out with the November contract. I want to have time. If this thing is going to run, I want to stay with it, let it run for max profit. So I'm in that trade, and it's a go. And I'm going to start wrapping things up here. We've been waiting for the Fed announcement here in our trading room and in my pick service for a couple of days. But I just want to let you know that, if you've been watching this and you're interested in what we're doing, the method that we're using, right? I do have a trade pick service, do have a trading room each morning. And so, the things that I think we need to focus on, the essential things, great trade setups. I just demonstrated it. I waited for the setup on that. You got to have a high probability outcome, a great reward to risk ratio. Then you got to manage risk and have a method for how you calculate your position size, and then ultimately how you manage the trades, right? So anybody excited about the trade we just took, the SPY short, and some of the ideas that we looked at? Maybe you're a little unsure how to act on that, right? Maybe you feel like this guy right here, like, wow, that was a whole bunch of information and I'm interested, but just haven't been able to absorb it all. I'd like to take a few minutes and talk about an offer where you could continue, right? And, you know, finding great trades, it's hard, right? We scan literally dozens to hundreds of trades every day, Eva and I, and we find a couple of good candidates. Once you find them, you got to have a plan, right? You got to have a trading method. You got to have setups. You got to have risk management. You got to have trade management, and we have all that, right? In this service, my stock and option pick service, I can offer you great trade setups, risk management, trade management, up to 10 hours of detailed trade consultation per month, one-on-one consultation, education, and some tools. You get ultimately access to and help with some winning trades. And you can get that. You can take a trial and check it out for a month and see if it's a good fit. You can do that for 37 bucks. And I'm going to put that here in the chat box. So you can go check that out. So that's a 30-day trial for 37 bucks. And after that 30 days, it's 97 bucks a month, which is a 25% discount from the list price. And it's 100% money back guarantee. Come try it during the trial. If it's not a good fit, shoot me an email, give me a call, refund on request, no questions asked, no hard feelings. So that's the offer. And with my service, here's what you get. You get the watch list of trades we're watching, waiting for setups. You get alerts when there's a new trade, email, text message. And we just added Telegram Messenger app, which is worldwide and really working good. You get the exact details, every trade, entry, stop, target. You can trade with shares or options. I like options, but I provide the information. You can trade it either with shares or with options. And then when we make a change, move a stop, take profit, close a trade, you get an alert for that as well. You get access to the live trading room Monday through Thursday, an hour at the market open. You can attend if you want to. It's not required. It's recorded. You can go watch it later if you want. There's a weekly live chat session. We got one tonight. If you sign up now, you can join us. 6 p.m. Pacific, 9 p.m. Eastern. And then I offer, I give an invitation for a one-on-one consultation when you sign up. I'll give you a link to my calendar. You can book it and we can, you know, get you off to a good start, answer any questions. You get risk management and option trading tools and training included with your subscription. They're on the website once you get access to it. And ongoing support training. I'm here to answer questions and just help you out with the trading and getting the most out of the service. And there's more. If you take the offer today during this session, I have a Ichimoku Cloud. I have a proprietary and unique way of using the Ichimoku Cloud. You saw it on my chart, on Eva's chart, right? There's a course, list price 247 bucks. You can get that for free today if you take the 30-day stock pick trial. And so here's that link again. If you want to hit that link, and if you take this trial during this session, you will get access to the Ichimoku Cloud course, $247 list price for free. It will be included in your order. So that's a pretty good deal. All right. So how's our trade doing? So like I said, it's no surprise that it might be pulling up a little bit. We went short here. It's pulling up. We're hitting the cloud. We're on a 1 minute chart, very short time frame. So we're good here. No worries. And the question was, what was that stop on the SPY trade? And you see we're nowhere near it. Get back. So my current stop here on the SPY is 301. So if price gets up to 301, this lower low, lower high, lower low sequence will have ended, and we will end the trade. We'll just get out there with a small loss, small as a ratio of what we'll make if we go down to the target or beyond. So 301 is the current stop. And the way we apply that to options is everything's based on this underlying ETF, right? So we're going to take all our signals off this chart. So if we hit this stop, we'll simply go close the option position for a small loss. All right. Any other questions? I will hang out. So if anybody's trying to place an order, you know, or has questions about the offer there, or, you know, any questions about trading. But that's really the end of the content. And I really thank you and appreciate people showing up, participating. And hey, hope to see you in the live chat, the Q&A tonight, and the trading room tomorrow would be part of the service. All right, I'm gonna go on mute. Was there anything you wanted to close there, Eva, before we wrap up?
No,
All right.
nothing.
Thanks.
Have a good day, everyone. Let's hope this SPY, it's starting to reverse. Let's hope the trade goes our way.
Yeah. All right. Trade safe, everybody. Thank you for being here. So I'm going to keep the session going. I'm going to go on mute, catch my breath, drink some coffee. But if you have any questions, type them in. And I just want to give you time if you were placing an order so you can take advantage of this bonus. All right. So I'll just hang out here for a few minutes. Thank you again.